Stop it. It's embarrassing. What's our next trade? CR. Stop clowning. Ladies and gentlemen, welcome to yet another live stream for Cryptopocalypse Now. I'm your host, Crypto Ranger. And, man, at the end of the stream, we had that little struggling pattern that we drew. Projection into today, your intraday play, you know, accumulate your short or long into it. All I know is it freaking played out. Triple P, picture perfect price action on Bitcoin so far. And I think it's going to do what it's going to do. According to our analysis, so far, things are looking on track. Now, today's stream is going to be a bit more relaxed because nothing really changed from our last night's analysis, and we're still waiting for the final spike. The final surprise, gotcha moment on Bitcoin before we face a tiny correction, and after which, more continuation to the upside. That's another story. We're gonna look at it. Don't worry. Relax. Grab your coffee, your coconut water. Enjoy yourselves. Yeah, nothing really changed. Couple of signals on MarketSpy here and there today, but slow day overall. But you got your $4,000 range as promised, almost. Make it 3. Who's counting? Little change. But there's still a little bit of power left in this squeeze pattern that we're looking at, ladies and gentlemen. Let's get to the charts and start scanning. Whew. Hey, if you made some profits from last night's analysis, then yeah, do click the like button. Thumb it up. What do you mean no sound? There's sound coming in, loud and clear. There's sound coming in right now. Okay, we have sound. We have sound, ladies and gentlemen. We're okay for now. I mean, like I said, don't pay attention to the overly complicated setup that we have here. Sometimes things get a little shaky because of that. But overall, Rado's just pumping out chart after chart, good looking charts too. Playable charts. I like that. Inside of our Discord. Profit wall, healthy. What am I missing here? What am I missing? Here's what I'm missing, ladies and gentlemen. So let's pick up from where we left off yesterday. So we have this pattern, right? You asked for it, you got it. Now we kind of try to break out, and there's a little pullback that we're experiencing right now, and things are they may get a little tricky. So let's try to understand what's happening on the chart. But this is basically this is way before anything, right? And now here we are. Now there's still a couple of things that can happen here, okay? A couple of things that can happen here. Mainly, I think that, by the way, this is recreated. I did not save my chart last night. So I'm just gonna get rid of the waves, but we're looking at a pattern that's, you know, it's pretty accurate to that thing that you just saw through Discord. Okay. Waves are a bit too aggressive, right? We have 1, 2, and we're going to continue. I think we're gonna have an impulse at the end. Maybe, or my idea here is that we may actually start going down, and it could be a flat here. But anyways, you should be accumulating short into the blue area here. No. I'm not saying that you should be. I'm just saying according to our play, how we're tackling this whole thing right now since last night has been our understanding that we would rise from this point all the way up to here, which we did. Now I think it's due for a little pullback, and then it's not going to break anything. I think it's going to stay there, creep up, impulse up, and then get rejected, and we go down. And I think weekend could be the sell-off weekend. Not a sell-off, taking profits on lots of open positions. Now open interest dropped significantly on Bybit and other exchanges as well. Should I keep these lines? You guys already know. It's in the platoon. You already know. We're not going to keep this here just because we can, you know, you should have that being printed in your mind. Trend line is quite obvious here. I think the reason it's going up like this is because we're not we've exhausted the sellers, to be honest. This is what we had last night, right? Just trying to get an accurate representation of what we what we saw. But hey, so far, little tiny intraday plays. The most accurate chart in the world. Since 2 months ago, we've been tracking this thing, and it's on point so far. Day to day. And this is what's next. I think it's going to start creeping. It's going to have an impulse. 33, 34, not higher. And then there's going to be an event, profit-taking event, that will take place up at these levels. It'll come down to this grind line, bounce away from it a little bit. We're going to have like a little struggling price momentum we'll try to reverse, but momentum doesn't work like that. You know, once it starts falling, it can only accelerate by backtracking a little bit and then pushing forward or down in this case. So let me see if hey Josh, you saw that, you noticed it. Junk fiat. You know what, I wish it was a thing that, you know, I'd make it a prize event where you deserve a little prize for that. Good detail analysis. Yeah. That's what it represents. Don't get me wrong. It's not that, you know, it's not that other thing. It's in compared to crypto, right? 350% trade so far for Radosh. Nice. Bearish divergence on 1 hour. I think we have correction down first to mid 36 level. Yeah, well, maybe. It's held on this support. Let's get rid of the blue line because obviously we have a more streamlined version of support here, which is the original 2 green lines that we had over here. Let's get rid of this as well. Don't need it there, just to clean things up, and we can see where it bounced. And yeah, we're seeing signs of divergences along the way, and that is to say, it's time. It's showing. It's not a signal where you have to jump in on this and say, yeah, I'm shorting it right now. It is time to start casting ladders and aiming for an accumulation range. This level has to, it must get run, like this wick over here. It must get run, which could propel us slightly higher than anticipated, slightly higher. But it is looking like quite a powerful trade setup here. Now overall, we're doing great. Is Bitcoin on a path to recovery? I don't think so. I think it's an intra, better than an intra trade. Call it a bear rally. It's a corrective rally, in my opinion. They tend to be very aggressive. Trend reversal is very slow, not as obvious, you know, boring. Could end at any time. It's hard to catch, but when you have aggressive impulses like this, you know, think liquidations, think margin, think all these exchanges trying to flush out all the over leveraged traders. Think all of those things as an opportunity for them to kind of even out the market and bring it to ground it a little bit. And I think that's what's happening right now. It's not a sudden awakening interest, influx of money, reversal, challenge the all-time highs and go higher kind of situation right now, in my opinion. Okay, may be wrong, but this is what it looks like to me, especially after you have a technical pattern like this. This is not a reversal pattern. It is a corrective impulse pattern right here that we had, this arched banana setup. So sooner or later it's going to hit some plateau, and then it's going to have to come back down and relax. And overall, if you look at it, it's still quite a sophisticated flat range that is bound by. So let's just mark these. Okay, 4 points. Like I said, the next signal that we will have on the charts will be a buy signal. Yeah, I'm not sure if this was it. I highly doubt it, but it looks like it's bounced off of support, except we don't really bounce off of support once, especially if it's flip support, resistance flip support.
I think it will eventually come back down to it, test it again, and retest this grind line right here. Go back down, go lower, recover, start climbing, and then by that time, like I said, we looked at a potential double bottoming here, which would be quite obvious and a very strong signal to for a potential trend reversal, but that's going to take some time. That's going to take some time, ladies and gentlemen, and it's not going to happen now, today, tomorrow, next week. Going back to the actual idea of resistance, right? I think I want to stick with my original theory that the gap that's been created right here in the blue, this is the actual resistance to watch. It was not here. I don't think this is it here. I think it can easily get run, and 50k is not impossible. As a matter of fact, it would be very appropriate to see those levels again. And of course, by that time, once we're at those levels, just think of this trend line when support breaks. This is a parabola we're looking at. You know what happens to the parabola once it's broken. It breaks, it goes up and grinds like the backside of it, like this, and then comes back down. I don't think they want to do that right now, because that would create a M top, huge M top, and it could potentially spell trouble for Bitcoin from there on. So let's hope that it's not it's not in the plans to make that happen. But you know, the gain here is quite significant, and I'm just waiting for one more impulse. I think I want to go short and hedge at that point. This green cloud, however, on the daily chart, I don't know if it's going to usually when it starts, you can see it lasts for a little bit. I don't know. It's making me not want to trade against the trend right now. The trend is too powerful, and obviously there's, like, if we're looking at this pattern over here, right? Let's just take a simple base measurement right here, and from the impulse point, we're pretty much like done. Okay, this would be the top. And it would be appropriate for Bitcoin to correct from here. If it continues higher, we're gonna face a lot of volatility, and lots of people will be punished for going with the trend and against the trend. Like I think it can get quite violent if we go all the way up here. If it starts to, like, if traders perceive this as resistance, which I don't think think about it. Yeah, they're like, if it gets run, it's resistance. It's not resistance. Resistance would be like when it goes up here and swiftly gets rejected back down. That would be resistance, right? So in that case, yeah, I agree. We're topping out near 50k. However, right now we have day-to-day trades that we need to look into, and these wicks over here, price is kind of grinding up slowly, and judging by volume here, there's a little bit of excitement in the market, but I just don't think this is fresh money entering all of a sudden. I just think that sellers like capitulated over here in this range somewhere, even though we don't really have a capitulation candle. We don't have it. This one right here, I don't know. Maybe a lot of people got liquidated here or something. I don't know. But usually we have a follow through of the bottom candles. So we have one at the top. There's volume right here that came in. Okay, and all of this had to play out. Went back down. Capitulation candle. But it's not the bottom yet, and we're supposed to go a little lower to create another follow-through volume candle here, but we didn't get it. Now we have one that came in over here, close to the top of the impulse over here. So that's percentage-wise, you know, if you're looking at traders finally jumping in, that's 20% later from the bottom. So that's 20% late to the party. Okay. And then what you're looking at here is that there's a potential long-term trend flow. This is the long-term trend flow, so we have to treat it as maybe a sign of things to come, which is we're going to be trending up for the foreseeable future. If that's the case, why are we not long? Why am I not? Maybe you are. I don't know. I'm not. And two things. We had a position here and took profit right here. Looks kind of stupid, but you know, 10% guaranteed, I'll take it. Good trade. Covered a lot of this nonsense here that I had to skip and not trade. And here we finally had a nice little jump. So it was at 10%, slightly under that, about 8%. Given that my average was sitting somewhere around here, the orange line. And so we made these highs, went short somewhere around here, had to average out, close both of my accounts, one at break even, one at a slight profit due to a good number of contracts that got picked up on the way. And now we're looking at that specific pattern that we discussed in the platoon, where we're going to be recovering, and we're looking for an impulse up. Once we have that impulse up, I think we'll see a little run of this level and then a slight little correction. But I'm still not buying, and the reason is because I refused to buy at 30k. I thought it was too expensive for Bitcoin in terms of its correction. It was fast, it was vicious, but it didn't give a follow through, and I think we're yet to see that follow through. We have seen these patterns before. Don't be surprised. Like, the most important thing is not to be in disbelief and say no way. Like, yeah, right, you wish, you know, you want to buy 20k, so does everyone else. Trust me, I will buy it at 20k. Maybe not tomorrow, maybe not 6 months from now, but I will buy it at 20k. And so will you, if you play this right, if you don't let emotions get in the way. Which disbelief is another one of those things where it's like, yeah, Bitcoin, you know. So yeah, it's coming. So if it's a corrective wave, don't be surprised if this goes up here and then spills like this, right? That would totally shake the market, take them out by surprise. And that'll be a Darth Maul candle on the weekly chart is all. We're gonna have one body like this with 2 wicks, and it's gonna be a doji, and then it'll recover back to here and start grinding up. And there you have it. There's your 20k. Easy peasy. A weekly or a monthly Darth Maul candle like this, which will mark the bottom, capitulate both bulls and bears, and off we go. So let's not celebrate anything just yet, or let fear creep up and put doubt in our minds and say that, okay, yeah. My thing is very simple. We go up, I'm looking for shorts. We're going down, I'm looking for longs. I'm playing limit orders, and so it's a thing. If you're playing this by feel or by signals, then go ahead and use the market buy and chase candles directionally. just make sure to take profit on limit if you can, soon after you enter the trade. Don't forget to close it on the next candle or something. But that's your intraday plays. But overall, directionally, like, you know, once you know the direction, you have two options here. At Cryptopocalypse Now, in the platoon, for example, if we talk about a pattern like this, we say we're going to be coiling up. This means two things for you as a trader. One, you can go long inside of this pattern, okay? So as long as you understand why I'm projecting that pattern and why it's going to be the most probable case for intraday play, so you will long, or if you're like me and you're thinking one step ahead, you're saying to yourself, I may not even be interested to look, because I know if the pivot was here and we made it this far, there's only a little upside left here. So if it goes up, then it's most likely going to correct down. If I can average just about here, I can capture this area right here as my profit. And the same way, I can go long from here and take profit here. The only thing is, you don't know where the top is. And you don't know if you go long right now that it will actually impulse up. But if you're hedging against that upside, against that volatility, and as Bitcoin value increases and you're adding to it and you're building a short position, by the time it's ready to pause a little bit, you feel a bit more secure. In my opinion, that's the best way. Not always, but in this case, 30% off the bottom. You can't tell me that you can expect another 60%. That doesn't make any sense. Or another 20% to further up over here, or double this range. Even if it does, your average entry to a short would be somewhere around here as you keep adding, and trust me, it will give you that corrective wave down, and you'll take profit, and it'll be the same as you going long right now, except you're not really sweating because you kind of have a plan set in advance, if that's what you want to do. If you want to go long, then you have to wait for this thing to come back down. Get long on it between 34 and 32, wait for it to recover and capture that distance as your take profit point. Okay, why? Because you'd be far away from the top, correction would be done, there's a potential trend line here that you can look at as your support, and you can long it from there. So one step ahead. So once we have a directional trade, either way you're safe. You have two strategies. You don't have time to babysit it, scale into it and short it, because the longer you wait and the more up it goes, the harder it becomes for Bitcoin's price to advance further, because sooner or later profit taking must occur and people will take profit. And the markets are driven not by investors but by traders. Remember that. 100%, 1000% driven by traders. And what that means is that it's not like they invested and they'll refuse to take profit. The market's correct because there are traders in it. The markets bounce away from moving averages. It's because investors are not looking at those averages. They don't care. They don't care. They're waiting for 20K. They're waiting for 25K. Traders, and I don't mean like day-to-day traders. I mean, sometimes you have traders that are managing a 3-month-old position, 6 months old position, like half a year inside of a trade, depending on what kind of size they're moving. Or you have traders that are moving markets using small scalps. Up it goes, they short it, down it goes, they buy it, and so on and so forth. So if you think about this in those terms, then going up and shorting it makes sense, because when the profit taking occurs, it's almost guaranteed that you will profit from that as well. So you're one step ahead of the game. Same thing when it goes down. You want to be buying on a confirmed trend and second wave, second opportunity for Bitcoin to bounce, and you'll capture this little trade right here. And we're talking decent amounts from here to here. That's 3,700 points, 10%, 5%. That's a good trade in my book. If you are looking to do small plays, like Radosh there did an excellent decision to go long. I don't know if it was according to the pattern or his own analysis, but whatever is clever. If you believe in it and you're ready for it, you go long. Say you chase it, market buy, instantly limit sell. 100, 200 points later, you leveraged up, boom, trade is closed. Directionally, you were aware that we're inside of a squeeze pattern that is likely to go up. And your plan is, if things go south, what would you do then? Your plan is to simply put a stop here and a stop here on these two green lines. And if this doji shows you a sign of life and you want to go long right now, you simply go over here at the open of the candle, either put a stop here or here. That's up to you. That's you chasing. But me, I'm looking at it like, oh, okay, so it's already gained 30%. Nothing goes up forever. And markets, they tend to pause a little bit and then they have an impulse that is like driven by greed 100%, and then it corrects. I want to be shorting all that greed and taking profit somewhere here. So this distance right here is probably the same if you're long, you can capture it here, except you're not guaranteed that this is going to go up. And the question becomes, if you're long here, you stand to lose a lot if this decides to correct. You're done. Me, because I'm shorting into the last breath of fire over here from the dragon skin, I know it's going to exhaust. I may pick up some contracts, and when the elevator comes, that's going to give me a decent, safe trade that I can just call it as another one of my small wins that I can live with. And the main purpose, if you're a trader, you should know this by now, is the preservation of your capital, your funds. Your portfolio must maintain its health and not lose its value regardless of what Bitcoin does. That means taking profits, selling it off at the market, not looking at the price and saying, oh, I'm going to sell it when it goes to 40 or 50. So seller's remorse, get rid of that. You're always going to regret. There's no good price to sell at except the price that you see right now. And so these are just like little things to be aware of when you look at the patterns or the things that we present here at the channel. And when I tell you, this is what I'm expecting, directionally, you're not counter trading that because I am the authority. No, it's not that. It's just I would not want to share something that would hurt you and your portfolio. So if you follow these along, then it is in your best interest to kind of stay aligned and synchronize with this. I have seen these things play out again and again, over and over in the past across a variety of markets, and I'm just lending my trained eye to some of you guys who may benefit from that as well. And so that's how it's done. But a directional awareness for price action is when you're saying, okay, we're expecting it to go up. You have two choices. You don't know how high, but you're thinking about how can I minimize damage if things don't play out. Now let's argue against it and say, yeah, but what if this thing goes up here and then corrects and goes up here and then corrects and goes up here? What are you going to do then? And you will say, CR, can you argue against all this? Like, where was your correction here, 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 here? The thing is, when you're looking at this chart, and because of how crazy Bitcoin is, it looks like it's only going up, and for the most part it's true. But I'll tell you that there's this thing where as a trader you don't hold positions for long, and I can guarantee you that if at any point in time you were to average in and play this by the book like I'm describing, you will have made money. It doesn't matter that it's going up. Let's say you shorted over here and you thought this was going to go down, but it went up, and you thought that resistance was here, and you're like, okay, when it comes here I'm going to start averaging out. Okay, here's the thing. You're not going to average it out by simply putting a limit order where your average entry becomes somewhere, let's say around here. Roughly, it wouldn't be. It would probably bring you up to here, depending on how much you put initially in this short here. So let's say it goes up. It goes up to this level, and you're thinking, okay, this is resistance right here. Now, you know, there are two rules about resistance. True resistance, meaningful resistance that is going to be playing a role of support in the future, will need to be retested, revisited. So probabilities tell you that there's a chance that it will come back down to that resistance. So you're not averaging in here or here or here. You're waiting for it to go near the resistance, and then you're waiting to see if it's actually going to run that level. If it runs that level and goes high, there's a point where you will find on market enemy, for example, right? There will be a point where you will have your short box where you will cast a ladder and average. I guarantee you that if you went short here, waited, and averaged in over here, then you had your little correction and your average price brought you back down to around here, and you exited at break even, and now you're reevaluating. So you just canceled out that mistake completely without losing anything, but you had to wait for all of this. The only price you paid is time. 67 days, 2 months staying underwater and paying fees if the funding was negative and you were the funding was positive and you were long. That's the only thing. So when you squish this like this and you look at it and you're like, yeah, but what if it goes up, 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 up? You're playing with ATR values. You're looking at intraday charts. You're not looking at the general log scale trend that has no resistance whatsoever. So this will not go up like this. It just looked like that on the chart. Actually, when you're zoomed in, you will have very clear opportunities. So when this level gets run, for example, I'm going to scale in 1x and hope that my plan will play out and price corrects. I'll be able to take profit 1,000, 2,000 points later. Okay, so $2,000 drop, I take profit, I'm happy. What's my next setup? If it doesn't, if it runs here, I'm doing nothing. I'm waiting for this thing to reach this level, and I'm still not doing anything because I want to see if this true resistance, and I believe this is true resistance over here, with the gap, will actually be run. If it gets run, I'm automatically scaling in this range here. Okay, and I'm bringing my average price somewhere to around here. Now when this thing finally drops, I will instantly exit at break even, recalculate, and go short again, because I know this is most likely going to from here grind up and then correct. It has to. So you're looking at a chart like this, nothing too freaky, and you're not surprised that we're now suddenly at 70k. All you have to do is maintain that protocol where averaging out your trade or rescuing your trade like this is something that no one is going to teach you and tell you about, because they want to attract people who want to become rich overnight. This is a lifestyle. This is what you do. It's a slow grind, it's a lot of fun, and it shouldn't be stressful. Sometimes there will be situations where you have a technical stop and you're saying, if according to my technical, like you have signed an agreement between yourself and the market, and you say, I'm willing to lose $1,000 on this trade maximum, right? And once you have internalized that acceptance, then when the stop gets hit, and if that was your plan, you're just like, I don't trust it. Like, for example, go long right now in market and calculate your risk and say, if this drops by 3,000 points, this is where I want my stop to be. I want my stop to be sitting right here. And it'll tell you how many contracts you're allowed to trade if you're only willing to lose $100 from your account. So as an experiment, let's do that right now. I don't know why it's not working. Okay. So let's say you want to go long at 39,626. Okay, 39,620. You don't know how many contracts. You're not just randomly throwing a number of contracts and leverage in there. Leverage will be determined by the number of contracts that you put in. Leverage that you set on Bybit, the magic slider, 2x, 5x, 3x, does not matter. Leave it across and forget about it. It literally does nothing. It's just, I don't know what it is. It's for rookies. It's to make people feel like they're actually part of this sophisticated technological advancement where they will use leverage and be smart about it. Your slider doesn't do anything there. So let's say you go long. The amount of contracts determines your leverage. Look, my leverage is 0.06. As more contracts get added, this thing will grow accordingly, right? So okay, you're going long and you're saying, yeah, my stop loss here should be at 36,384. Okay, and you're going long, and your take profit is at, let's say, 43,000. And here, this thing is going to tell you, oh, by the way, you're risking 1%. And in case of a loss, maximum amount of risk without fees is $400. You're not cool with that. You're like, I don't have $400 to lose. I always have it to gain if my analysis is correct. Yeah, give me $400. I'm ready. But you're saying $100 maximum. Otherwise, I don't want to do anything with this at all. So you adjust your risk until this matches $100. Sorry. There we go. Maximum amount at risk without fees is 82. So the loss plus fees, if you get stopped out, is 83. The risk to reward ratio is about 1. So $3,000 down, your stop is here. For a profitable trade, that goes up by 3,000 points. And you're risking $100, which is 0.2% of your, in this case, it's a 1 Bitcoin, roughly, account. Okay? So the amount of contracts that you're allowed to trade is 1,000. If you don't want to lose more than $100 on this stop loss, then you can only trade 1,000 contracts with an account size of 39K whatever the value of Bitcoin is right now. It will tell you this thing. This thing will tell you. So you can see how maybe this is not a fun number. It's like, what? But hey, if you're talking about volatility and longing from here, where would you put your stop? If you put your stop here, let's say you want to wait a few days, and let's say this thing goes up, goes down, comes back here, grinds, bounces, goes up, finally bounces up, and voila, you're at 43, right? Let's say it does that, but your stop is right here. The profit, your gonna return of investment is 8%, and profit, since it's 1-to-1 risk reward ratio, is, so your loss is $85, roughly 100. So let's adjust this and say 2.9. Let's not be extremely cheap and actually make it $100. So you're risking $100 to make $100. That's a risk to reward ratio of 1. So what you put in is what you're going to lose. It's a coin flip, or what you're going to win, given that price makes that distance. Now you agree to lose 100, but maybe you will decide to say take profit. I don't know. Price moves by, say, 200 points. You're not waiting for it to move by 3,000 points from here. You're waiting for it to move by 300 points, and you're gonna bank about I don't know, like what, like $13 or something on that, if it moves by that. No, less than that. It's pretty late here. I don't know. My math is off right now. But basically, you're looking to take profit. But this is still a profitable trade. Your account is still secure. You still added more Satoshis to it. And your goal is to eventually hodl Bitcoin and sell it eventually. If not, if that's not your goal, then you should probably add more to your account if you want to be risk-free. Not risk-free, but a well-managed account that is worth keeping around, that can generate a couple of $100 every time you trade. The bigger it is, the more you'll earn, but your risk profile and the way you trade should always be the same thing. Like this, it has to be calculated. Now let's say you're like, yeah, but according to my indicators, according to my feel for the market and experience, I don't think Bitcoin is going to come here to hit the stop loss, or I would like to trade with bigger size and at the same time lose only $100. There's a 15-hour chart. Let's drop down to about 15 minutes. And on a 15-minute chart, you have plenty of wicks to work with, and let's just say our stop, we decided that this wick right here, this is a pin bar, and we have another one that's an inside bar. It's a reversal signal, tiny little reversal signal, but it's made its ATR value. $300 has actually exceeded a little bit on a 15-minute time frame. Okay, no problem. It's made a fair distance away from this entry based on this price action signal right here, without using momentum or indicators of any sort, like just by looking at candles and possible support near there. Okay, so you're saying I'm gonna put my stop loss right here at 39,330. Watch what happens. You're now allowed to trade 14,000 contracts, and you're still risking only $100. Why? Because you moved the stop from 3,000 points down from here and made it tight. It's a tight stop that gives you an opportunity to trade with bigger size. Now it's 14. Now risk to reward ratio increased tenfold. Tenfold. Meaning your entry is 39,620. right here. Roughly. Okay, here's your long right here. And your stop is right here. And this is what scalpers and everyone else is doing right now. This is probably what they go for. And you're thinking to yourself, okay, all right. The risk to reward ratio looks like this. Oh my goodness. I'm sorry. I think I just duplicated this to infinity. Here it is. And the magical Twitter sort of macho man trade setup, 43,000. Now that's a trade worth taking. It's not gonna come back down and hit the stop loss. It's gonna go all the way and make me a millionaire. There you go. So I might as well just disregard all of these parameters here and go all in and put 100K. Hey, some people do millions of contracts here. And so anyways, so this is what you have. You have a risk to reward trade that is basically 10 to 1. Now the size here increases, but it's nothing too crazy. It's only 14K. So it's a fraction of Bitcoin, and that's 0.25%. It's a quarter of what Bitcoin is worth right now. Does that make sense? If this stop loss gets hit, you're going to lose about $120 or so. There you go. Right here. But when the profit hits, you're going to make $1,195, which return on investment is 8%. You just outperformed everybody. Two things come to mind is, do you have the stomach to hold it? What makes you think it's going to go there? What makes you think you're not going to take profit over here, thinking that this is resistance? What makes you think that you're not going to take profit here? And what makes you think that this will not go here and then go back down? Consider the shorting strategy here. If you think this is going to go up, why are you taking profit here and not higher? What if it goes higher? Why not extend this all the way to here? Now, surely this is much better. I mean, look at this. 151, your risk to reward ratio here is 30. 30 to 1. Not bad, right? Well, markets don't move like this. So what's going to happen is that, what if you average in starting from, let's say you go short over here, get yourself a 1x position, and if it goes higher, you'll average in over here once this level gets run. And then you'll bring your price up to about here. And when the correction happens back to support, you will take profit. Now, I'm not going to calculate this, but let's say everything in life is already priced in. Every time you go to your local mall or a grocery store and you see something on sale and you're getting a deal, you're not actually getting a deal. It's calculated so that it's affordable for someone out there. No one is sacrificing anything for your sake. Okay? When you're getting a deal, it's actually desperate times and them trying to get rid of something. 2 for 1, you know, sale. There has to be a reason. The universe already priced it in. It's not worth it. You're not getting a deal. You're paying a fair value for whatever you buy, and some of the times you get ripped off. You can never find a deal anywhere. Every time there's a marketing firm that thinks about how can we make the customer feel like they're getting a deal and win their loyalty, they're playing clever mind games to make you believe that they're treating you right, but actually it doesn't cost them anything, and it's just a marketing PR move to make you feel a certain way, but they're not really losing money because of you and the deal that you're getting. they can afford it. They can afford it to give it away to you. So the market is the same way. Here's the thing. If it goes up and you average out, when it drops, it'll make the same distance as when it's gone up from your entry, and it'll probably eat your stop and then go up. But when it goes down, it will go down to retest this level for sure, and you will capture, without any stops, without any other nonsense, based on price action, a 14% move to the downside from there. But to get to, and the number of contracts will obviously exceed what is recommended here by Bybit Pro, and your risk percentage will go through the roof to like 4 or maybe 5%. As you can see, numbers change drastically as you increase that risk over here. We should generally never trade above 1, and 1 would be if Bitcoin is at 50 and I have 1x average plus adding, I will probably hit this mark right here. I will probably have around 60k or maybe 100k contracts if I go 1x here and start averaging around here. You know, it's probably going to bring me to around 80k, 100k, 56. So I'm pretty much within like 1% of my risk profile of my account. And the stops, none of that. I don't really care about that, because it becomes a systemic risk where you have to decide whether to keep the trade rolling or get out of it. And so, but I'm still going to capture that same amount. It's just not going to be really right there, right then in the moment, you know, like you would if you were to plan this trade, put a stop loss, and then pray that it actually occurs. In my case, I know it will happen, I just don't know when. But basic math tells us that so whether you're short or long, it doesn't really matter, is what I'm trying to say. As long as you keep managing your positions and your risk accordingly, then you're not really getting a better deal by longing. I should have longed instead. And you're not really getting a deal by shorting, just like everywhere else in life. You're getting what you planned for, and especially in the markets, it's exactly what you wanted. You wanted a profitable trade. You saw an opportunity. If you went long, great. You have your stop loss, you have your target. It is likely though that you will not be able to hold that trade for a $3,000 move, because as soon as it pauses, goes and drops by 1,000 points, just a little hiccup, goes down, volatility, you know, let's say this spikes right now like up to here and then suddenly retraces, you'll probably take profit right here, which is exactly what I mean. That if you trade this and if it goes up and post the ATR of the value of these candles, which would be somewhere around here, you should be taking profit. That's why I have a system that I share with you where we're out by 90% of our holdings of this size. 90% is out on the ATR value, and the rest of the 10% you can ride it out and see how high it can go, and then you can trail it, you can stop it, and then the market will decide what to do. Then it's not in your control. And I think that's a beautiful, beautiful system that no one really talks about, because it's not in their best interest to educate their users to trade using these kind of parameters, this kind of logic. So and plus it really looks great on your resume. Trust me, if you go to you know, if you ever decide you wanted to give it a shot and you go try to work for a firm and you have built your portfolio and you show them your results and say, look, I have a system that I've developed of trading, I understand the market, I trade like 3 commodities max plus Bitcoin and 1 equity out there. That's it. That's all I'm focused on. That's all I know, nothing else. But I do those things well. Here are my results. And I may not always be profitable, but I'm very good at managing my shit. So if I start with 5k at the start of the year, I could have a shitty year and still end up with 5k. not a scar, not a scratch. Yes, you didn't make any profit, but you're still in the game. You get to trade another day. The market is your friend. It will give you another opportunity. And it comes down to this management. It simply comes down to this management. There's nothing else that matters. Everything else is gambling. 100%. And gambling is fun, I get it. But let's be real. It sucks to lose money, and it would be nice to make some. So let's focus on that and not be distracted by other people's pockets or results, but rather focus on building your own strategy you can rely on, because you can really beat the market. You can do so much more than you're doing now. I believe that there's always something new to learn from this. In terms of tricks of the trade, where there are, number one, there are no secret patterns. Number two, there is no secret sauce. You can build an algorithm that successfully interprets price action. And similar to MarketSpy, maybe, you need components like momentum, support levels, as well as parameters that are programmed, understanding like market cycles, and so certain lengths of moving averages that you can program in, and how they correspond to a variety of markets, back tested like against 26 instances of different markets, 26 of them, 24, and don't need to go back to 1924. You can only go back to the 90s, or maybe a couple of years back, and that's all you need for a back test. See how it performs. If it's good, use it, and use these key points of trading philosophy to help you understand that management is what's appreciated, is what's professional, is why people want to hire you, because you understand that if you go to a firm and they give you $12 million to trade with and turn it into a couple of $100,000 over the period of 1 year, and if you can achieve 6%, you're a star. Now look at us. What are we doing here every day using these strategies? And no, smaller accounts get the impression that they can get away with it because, hey, I have nothing to lose, might as well go all in. This is not Wall Street Bets. This is not Crypto Face. This is none of that. This is something that you do, and you do it well, and you do it for longevity. Anyways, either you're short or you're long, doesn't matter. Directionally, you can make a choice. As long as you're aware of that directionality, you can go short using a strategy like what I have just described, or you can go long, but make sure you have your stops. If I'm short here, make sure you have... Now Bitcoin, if you're short, you will get stopped out. Why? Every instance of a high on Bitcoin gets run over and over and over again. Why? Why is it so? Every instance of a low on Bitcoin, let's get rid of this, rarely gets touched, but it creates a significant distance between, like once it starts moving, the distance is so huge so that if your entry is here, obviously your stop is here. And now you go from here to here and you're like, holy smokes, that's a 3%, that's $1,000 distance. Now you punch that into the calculator and you're like, I don't want to lose more than 100. And it gives you like 300 contracts to trade with based on your account. And you're like, is it even worth it? I might as well just like long it now at 1,000 contracts and come back to it 3 months later, knowing that Bitcoin by November is probably going to be trending higher, hitting those peaks and then testing the all-time highs. So why trade every day then? It doesn't make any sense. Longing Bitcoin is always profitable. Longing any market is always profitable, more profitable than shorting it. But we have a lot of people who are interested in shorts. Why? Number one, it happens so fast. If you can mark it and snipe it, boom, instant reward. You're gonna get that once in a while, that candle that is going to, like, the waterfall candle, the elevator, the supernova. And it's good to see that profit roll in, and you're like, wow, that was a beautiful trade. How often does it happen? I would argue that 85% of the time, any asset trades sideways. Slightly up, slightly lower, but sideways. It is very rare when you find a trend. Now, Bitcoin, on the other hand, is the only one of a kind that I know of that is consistently going up. It's actually correlated to every other asset on a log scale. If you zoom out, take a look at Amazon, Spotify, anything that's brand new has no chance but to go up. The reason it gets listed is not so it can get dumped. It gets listed on NYSE so that it can go up. CBOE, CFDs, all sorts of things. It's just that leverage makes it not matter a lot, because you're trading every day. You're trading that difference, that spread, and you're capturing small. That's why we have all these strategies like ATRs. We have like momentum, RSIs, and all that stuff. It's for traders that move the market. And when they pile in, they create this sort of momentum that takes you higher. Once they realize, and their little indicators start telling them that this is a potential, and once all of them agree, they're like, yep. So many people are looking at individual indicators. An algorithm looks at a multitude of those indicators and tells you that, yeah, they're all in agreement. It's called confluence. It is likely that this thing is going. Do they make mistakes like MarketSpy does every once in a while? Yes, sure. But if you're managing, you are invincible. You cannot be touched by the market if you're managing it, because no matter how bad it gets, you're scaling into 20,000 ranges, and you're thinking Bitcoin can and probably will do it, and one of these days it will happen. What am I doing then? And you don't know. It starts moving by $5 down. Look, $200 up from my entry, minus 14. And you're like, is this the top? Is it going to go higher? Is it like, you just don't know if it's trend reversing or it's just ranging, dancing around, right? And it makes you nervous if you have a lot of contracts at the same time that you can't work with. It's just contracts, they have personality. You have 100,000 here and your account is below that 1x mark. Your account here is only 41,000, but you're trading with 100,000. You get very uncomfortable because it's not you, it's not your account, it's borrowed money, it's leverage, and there's a price to pay if you're wrong. It's not like spot where price goes down and you're okay, you're just losing the value. You're like, yeah, I'll recover. You can't hold this thing for long, so you need to make a decision fast. And humans, especially if we just started doing this, we're very bad at we're pondering, debating, questioning, instead of just like cut, I don't like it, cut. So I can market close this position right now if for any reason I feel that I'm a little too early to the party, and I lose nothing, but I get a second chance, which is probably going to be better, because if this thing is going up, now I know where to average in to get a powerful, nice leverage trade with 1x or more. You're just kind of fishing around, seeing what it feels like until you land on one of these trades. So every time there's a breakout, consider like this range. It's like breakout, higher, and then it goes down. The instant you go long, it goes down. You get nervous, and you're leveraging in, and then you just about had enough, and you're like, okay, I'm done. And then it shoots up, and you're like, all I had to do was just hold it. But the only thing you can hold is that if it's below 1x for you to feel comfortable, so that it can fluctuate by $2,000, $5,000 up and down, and you can plan, you can work with it. It's pleasure doing business, you know. Instead of this capricious, annoying 100K position that can completely liquidate you if there's a glitch, if there's anything, you know, and your emotions, and you have to make those decisions, and you're like, yeah, but if I close it too early, what if I'm right, but I timed it the wrong, you know, what if it goes up? And then so you end up holding it, and usually the things that you hold mentally are the big sized positions, because smaller positions, you're not holding them, you're accumulating, participating, adding, and working towards that plan to fulfill your projected targets, given that you have your proper technical analysis in place and everything is ready, and then you just, you know, you're waiting for the kill, and it may take days, weeks, but you're there. You have a plan and you stick to it, and it doesn't really matter. Now let's say this thing 2006.42, if I think this is going to drop where it's going to drop, I stand to gain about $200 from this, easy over here. Can I hold it for a few days? Sure. Will I? Yeah. What if it goes down here, bounces up? I'll probably add to it. Boom, add it. Then it bounces again. I'll probably take some profit, wait for it. It goes up a little bit, I'll add to it. If it goes higher, I'll not do anything. I'll just see if it goes again back to my original target from here. If not, I'll wait, add to it. It finally breaks, gives me that trade, I'm out. I was able to capture this, or however, you know, it's all minute to minute sort of monitoring, but the baby's growing up, so you don't have to really worry about it too much. But you understand the reality is that you're working with one Bitcoin, you have one whole Bitcoin, and your job is to protect that thing, because it could become the world's most precious freaking collector's item ever that's going to cost $1 or $2 million. So you want to hold on to that, even if you're day trading. If that was your initial plan. If your plan is to actually trade to make money while maintaining a low risk profile that anyone with like 13, 15 million would come to you and trust you and say, look, I know the way you do this, and with 15 million, I think you can make like 5, 10,000 a day, easy. And you're like, sure. But with a $1,000 account, you're making $10 a day, and that's the ceiling. You can't jump higher than that. That's it. If you want more, well, you got to invest and trade it for real, and put like 30, 40, 50 Bitcoins in it. And be careful, be hush about it, you know. Taxes, all kinds of things. It starts to get a little complicated, and you have to be very diligent. And up to $1 million, I think many people actually in our community, I would imagine, have close to about there, or maybe roughly like 500, maybe. Yeah, I think that's so, you know, these people have to be very careful, because that's kind of, it's a big investment, but at the same time, it can yield results that are really tangible. But for the rest, for people that are just like testing the waters, I think it's in your best interest to follow these guidelines that I share with you guys. And the sooner you realize that there's no shortcuts, the sooner you'll see success, as defined by your abilities and your pocket. Simple as that. Sorry, I'm a buzz killer. I talk. I ruin people's dreams when they're like, "You mean?" Like, yeah, unfortunately, yeah, it sucks. But so this is where a lot of people realize, well, maybe trading is not for me. Maybe the dream and the idea that they sold me was not it. But if you somehow came to it, and you're now, you know, processing all this, you're going through it, and you're starting to realize that, hey, I'm okay with this, I can manage. Yeah, training for a year or two, and then you can start increasing your risk taking a little bit more once you start understanding what Bitcoin is all about. For example, if that's all you focus on, which I do recommend you don't jump from one asset to another, because they're all different. They all have different personalities, and you better know her like your girlfriend, you know, like all of its little quirks and everything. You need to know Bitcoin and what it's capable of, and you have to respect it, and that's respecting risk, and the market will give back consistently. But it's not going to be impressive, and it may make you question whether it's worth it to even bother with it, in terms of like input of time and output of profit. I'm at the charts every single day, but I only ever see a trade every other day. And I trade and make a trade if I'm not using market like an old fashioned, you know, I look at like 5 different things. I have a couple of stocks that I look at, Bitcoin, and that's it. There's nothing else. And I've been trading those, and I have one FX currency pair. I look at those things. And whenever there's a trade on any one of these charts, you do it, you step away from it. 7 trades a week, that's a lot. Across 5 different investment vehicles. It's different for each and every one of them in terms of risk and how much is allocated, but that's a lot. If you have a trade a day, I believe that's a lot. Analyze more. Realize even more. Trade less, trust me. Ladies and gentlemen, it's coffee time. Let's go brew it up, and we'll come back and actually look at the chart and say, what is next? Okay, the pot is brewing. So here's another thing. Let's take a look at the risk profile here and see how we can work through these numbers in terms of I apologize if I killed the buzz, but you should be excited because this is the right way to look at it. There's no other way. So stop. Let's say you have how not to give up gains. Problem number 2 for the majority of traders out there is that they had a good trade and back to back they had a bad trade, and now they're even if they use the stops function and they go entry and they lose minimum, if anything at all. But there's another way to evaluate this. If you want to have a bit, to me, whatever the market gives you, whether it went according to the plan. First of all, ATR is the best method to take profit consistently, taming your expectations, throwing all the junk out of there, support levels, hopeful price points that we may or may not reach, and holding on to your trade. I have said this before, but I'll say it again. If you're holding a trade that's in the green, like crazy in the green, if you're holding it in hopes that just a little more, I can double that, you're conditioning yourself to also hold. Like generally you're conditioning yourself to hold. It doesn't matter if it's a profitable trade or a losing trade, you're holding it. So by holding, you hear the advice from books and other gurus out there that they tell you, let it ride. You're closing it too early. What's the point? Take the risk. I'm telling you, close the freaking trade if you're in the green. Sometimes it's going to be a few of these candles. Sometimes, which is not up to you or me or anybody else, you're going to land on this candle. Sometimes you're going to get a profitable trade that's 2 little candles and then you're not sure. Sometimes you're going to go on, it drops, you don't panic, you average in, add in, and you get 2 candles that reward you in the end. So what I'm saying is, riding the profitable trade, and they're saying trail it with a stock. Now, first of all, if you're trading a stock or government bonds, for that matter, that move very little and are so liquid that it's really hard to move the price at all. Bitcoin's volatile, right? You're having $2,000 swings within like 5 minutes back to back, 15 minutes later, right? Down and up, just killing all those stops, because traditional trading methods, they tell you that you should have stops in place. And we understand here that the only places that are viable and legit for stops are long wicks, not support levels, because that long wick is probably where price, that is your support. Whether you agree, whether you draw the line there or not, once the candle is posted and there's a long wick, that is your stop loss placement. Now, unfortunately, it's not up to us to decide how tight we want the stop loss. You look at the chart, and the chart tells you here, entering long here and putting a stop on the pin bar is going to give you a tight stop loss. If you're coming to this chart from, let's say, somewhere around here, you missed the pin bar, you missed the long wick, you missed it, you were not around, you were having dinner, or you were out, you just got back from work, and you're suddenly here. Now you want to go long here, you're still forced to place a stop loss here. You have no choice. That is the only place where it is likely not going to get touched. Whatever happens here, this can go down like this, can go up, you're holding it. This is the place where you're allowed to hold. If you have a calculated stop loss, you don't care. You don't care what it does. As long as it doesn't touch this point right here, you can hold this for days. But you have agreed to the risk percentage that you put in on this trade from here. And of course, the further away you are from the pivot, which unfortunately only becomes obvious once you're a great distance away from it. You're like, yeah, that was the pivot. You're not seeing the pivot when we dropped, and you're like, this must be the pivot. Unless, like, where's the support over here? You look back a few periods and you're like, why would it stop here? Why would it stop here? I'm telling you that price needs to perform some sort of dance artistically to paint patterns, and these patterns are mostly squeeze patterns. Now, when you have a drop like this, which is not sustainable, hence why yesterday we drew a line that looked like this. Okay, this is exactly what was drawn, and we said that it must create this pattern. It cannot just continue dropping here because it doesn't make any sense. You know, it doesn't make any sense. Momentum here is telling us that it is likely to do this, and it's done that. Today we had a gain of 4,000 points. I told you there would be a 4,000 range on this, and that's what we ended up with. Okay, cool. Your entry, your stop loss is always at the wick. The wick is going to tell you how late are you to the party, and will dictate the number of contracts that you will be allowed to put. So when you say I trade with tight stops, when you hear people say that, that means they're trying to snipe bottoms, or they're, as soon as they see it, they put a stop loss right there, they get an entry right there, and they hope for the best. The smart ones, price moves by about this much, first level of resistance right here, they take profit in this consolidation range right here. If you do it like I advise you do, you will take 90% out and you will leave your 10% running. You will keep your stop here, and once price moved away from it, you will then move your stop to the next obvious level here. Then if price creates another pivot, you will move your stop here, and so on and so forth until the next pivot is right here. Price moves up, the next one is right here. So technically, if you were to do a fresh trade right now for a long setup, you would put your stop right here and entry anywhere you want. Anywhere you want. Want to maximize your returns while keeping your loss tight? Well, wait for this to come down as close to the stop as possible, and get an entry somewhere around here and make a very tight stop so that you lose very little, but your number of contracts will go up. And if successful and it bounces, that tiny little bounce of 2-3 candles later will actually be very profitable, because the number of contracts will grow exponentially. The amount that you can put on this trade on such a tight stop will be great. The longer you wait for this to go up over here, the smaller the contract size will be. So you will have no choice but to still use the same stop area. And remember, the market knows there are stops too, so there's always a chance that price will come back and take that thing out. Now, are we seeing a little head and shoulder over here maybe? If it drops this level? Yeah, let's keep an eye on that while we're here. But yeah, this is regarding stops, okay? Like how to manage your stops. The other thing that I wanted to talk about is very important, is you had a trade and the market gave you this much. All right, 0.45, for example, on this account in particular was today's trade. According to the 15-minute ATR, it's made the distance, you took profit, you found it. It was a MarketSpy signal, short over here, boom, done, closed. And now you want to trade again, and you're saying, okay, I want to go and make a trade. Let's say your system is showing you there's another trade that's building up, and it's telling you that you may want to consider that and go long or short depending, right? And so you're thinking, okay, I have 185. So now when you're looking for the next trade, for the next stop placement, so let's say you want to put a stop right here and you want to go short. The maximum you can afford to lose now is not determined by the percentage of your account, but the percentage of your daily gain. This is just a recommendation, but I think you should explore this particular style of trading and say that you have to agree how much of, like, imagine this is now your whole account for the day. Forget that you have like one Bitcoin. You have a profitable trade right here, and of this you should not exceed losing like 20 to 30% of this, half at maximum. So then amount of contracts will be determined by your daily gain if you want to keep that no matter what. No matter what, you want to keep that daily gain. And so it is now approaching that 50% mark rapidly. And so that's the maximum number of contracts that you will be allowed to trade. The distance to your stop is right here. Now with Bitcoin in this particular situation, we know that the chances of stops getting run at the peaks is higher than stops getting run, especially because we're trending. You're directionally you're thinking, okay, we're trending up. Chances of your stops getting run from below is less, and chances that the next peak will get run is higher. So it's a little tricky because you're shorting against the trend, which is actually one way of looking at it, where you're selling into strength, you're buying into weakness. Very hard to do psychologically, but you need to understand what's going on here. Stop losses in that particular momentum traders and price chasers, they need to get in long here, go with the trend because that's your friend, put a stop loss here, use the calculator. Classic, traditional. People that are trending against the trend, it's not wrong. It's just that why would you recommend this to beginners or any type of traders? Because it doesn't make any sense. All the classical text out there is telling us that never trade against the trend. Don't stand in front of the train. It's going to run you over. But it depends on how you think about trends in general. I believe that by the time people realize there's a trend, it's actually coming to an end. So, in my opinion, projecting a pattern into the future and kind of preparing myself to hedge in it in case it fails, because it's not like the trend is just starting. The trend reversal started over here. And this is why we were averaging in and buying here and not talking about shorts whatsoever, right? So we had a trend reversal, now it's going up, but it's been going up for 7 days. And I told you in the last stream, 2 more days of an uptrend and then profit taking will commence. So we're pretty close. We're waiting for that impulse and then a failure that's going to follow, because it's this kind of price action is in excess of what normally the market would do. So latecomers, you're trading against them. You're not, if you're shorting like as soon as this ripped right over here immediately, yeah, I don't know. Shorting it over here, fine, there's a reason for that. Shorting it over here now, there are more reasons to actually look into short, because everyone's getting excited, the bulls are back. You know how that ends. When everyone's capitulating, selling, and saying that's it, it's over at 30k, draw the line, we're going down to 20. I don't know, not so fast, not yet. Market moves in waves, and we only had one wave down. We dropped from 60 to 30 like a straight line. Like, we're not going to drop to 20 immediately. We're going to consolidate, go up, bear rally, something happens in the future, then we bleed out, go sideways again, and then we finally drop. So those, yeah, and it starts now and all the way up to the previous peak, and your job is to identify the resistance and then trade it that way. So look at it this way, right? Just a small tip for people who are trending with the trend. Chances of your stops getting hit on a trend reversal on Bitcoin, slim to none. Peaks getting run and resistance levels, there is no resistance when we're trending up. There's resistance when we're trending down, and then we go back up to retest it. Yeah, we might face some resistance, and people say, nah, too soon, and then price reverses and goes back down. So in that case, yeah. But here, these are just some of the things that you may use to aid yourself on the journey, which should be exciting, and it should be thoughtful. This is a machine for thinkers. You know, this is exciting because it challenges your worldviews. The market is an all-knowing artificial intelligence collective mind thing that knows you better than you know it. And that goes for every individual that participates in it. It's a collective mind of madness, but things must come to an end eventually, and we will see those periods, and it's a good idea to be a contrarian when that time comes. So there's a time period, a specific time period for to be a bull when everyone else is a bear, and there's a period to be a bear when everyone is excessively bullish all of a sudden, especially because it took 7 days for the bulls to, like, you know, start celebrating. I don't know. Observe and you will see what I mean. That is indeed the case. But yeah, this is regarding stops. Keep that in mind next time you're placing it. Use your calculations here and you should be okay. This thing, I don't know, risk pain, and I'm guilty of it too. I don't think many people use it. I really don't, because it's not fun. Let's be honest, it's not fun at all. You know? But you should be using it, especially if you're practicing, to understand like what's allowed and what's not allowed. This thing, you should obey it. This is emotionless. This is telling you, like, look, you can afford this many contracts with this account size. That's it. If you don't want to lose a single penny from it, this is what you should do. Now, you're still going to lose something every once in a while. You're going to run into a situation where you just know it's the right thing to just take a loss and forget about it. It's the right thing to do so. But those are very rare, and it's kind of like this when we have a mega event that kind of catches you off guard. For example, here's a wick, and you're like, yeah, that's a pin bar, inside bar, very nice reversal. You go long, put a stop here, or you don't put a stop. You think that this is going to be like a W bottom here at the top, and it fails to go higher, instantly goes back down, posts a little what's it called, the Darth Maul candle here, sweeps up, sweeps down, closes in the middle of nowhere, goes again down, gives you lots of hope, and then completely capitulates, go down. You decide to short, it instantly reverses, and you never short the bottom when the peak is over here, right? It's very easy to know where the bottom is, and that is when you're most frightened, most likely, where you consider to going long. And yeah, things like that. And if you're holding, you should close your trade and take a loss and say, yeah, you know, that was weird, that was completely uncalled for. I don't know what happened there, but here we are, and I accept that the market was a little too fast and too furious. So I'm going to take a loss, for example, right? This is what you have to do sometimes. But most other cases, this thing is going to crash, man. Look, declining volume, small volume, start off with small volume, mark the top, seller step in, like a huge wick over here, seller step in. Okay, we took them out, one more spike, follow through, and then parabola over here, 1 2 3 4 5 6 7 8 9 days in a row. The party is gonna have to come to an end. Okay, simple as that. Made the distance, bases measured, breakout, everything. There was no retest, you know. The market doesn't move like that. It will not, I repeat, it will not keep posting more candles like this up to this level. No, it's gonna correct over here, do a whole bunch of bullshit, and then go up there. It needs to paint a flag. It needs to paint some sort of thing where it will confuse people. Right now it's just going up, 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 and that's because we don't have any sellers. But I also don't think we don't have any real buyers, according to what I'm seeing here. And it was a momentum trade based on liquidations. I'm not too excited, not yet. Whew. Absolutely, Clifton. We want to protect the bag. Actually, I really like that phrase there. You mind if I use it? We should protect the bag. Protect the sack. Absolutely, yeah. That's what it comes down to. The gains, they follow. They follow as a result of you not losing too much. Try not to lose anything. And if you follow these little tidbits of information, I guarantee you that you will do better than the 95% out there, in terms of like hecticness and the craziness that goes on. And you know, you're going to feel a little more in control, in my opinion, if you do these little things along the way. It's enough to just keep it in the back of your mind, and because you probably will not hear a lot of it ever again anywhere, because it's not the sexy part that we're dealing with here. It is not the sexy part. Oh, Simon, that's a good spot. I haven't. Oh. Yeah, so these divergences, here's what's going to happen. This is going to impulse up, stop, and then fail. This divergence is telling us what it's not going to do it now. It is, look, it's the thing is catching up right now. It's catching up with price action. So we had a little pullback. I'm waiting for that impulse. That divergence will materialize somewhere down the line here. Not immediately right now. I don't think it's going to happen right now. Although let's open the indicator, because when I'm completely clueless, I open MarketSpy because it's the only thing that makes sense. That gives me a visual understanding of what's happening. So okay, this is the high. All right, this is the monthly. Okay, monthly. Everything is set up to monthly, just so we know what we're working with here. The deviation from here, you see that cross over here? The cross happened and we dumped. Same thing is going to happen on higher time frames, and the dump is going to be much more severe than that. But from here to where the price is, we have a 12% distance away from the moving average, the Armageddon ribbon here, which tells me, like I said, I don't know what the time horizon is for this, but as it moves up and we stay away from it, eventually this bubble here that's forming is going to pop, and we're going to come back to that moving average. The line that we have drawn here like this, so manually when people draw lines, these are just there's actually a moving average here that represents this resistance and this support, and in our case it's kind of hugging the price altogether, but the 200 moving average represents resistance. We ran it right here. Now we have a crossover, and now we have support. This line represents support, and that support is represented by the 50 moving average ribbon right here. So price is going to shoot up, over exaggerate a little bit. We're gonna post a follow-through candle. I'm watching that this has been going up and volume's been going down. We're deviating far away from the moving average, and once we fill all the shorts here, it'll come back down, slamming into this moving average here, and then it'll start going sideways. We'll try to push it lower. In the future, if we get a cross here, that'll be a bullish cross. Price would be somewhere around here. We should buy. We already talked about that, but I'm just thinking a couple of weeks ahead of time. But for now, I'm waiting for the impulse, and then we come back down towards this line, towards this moving average bundle right here. Yeah, so will Bybit's changes to set leverage on cross affect Bybit Pro? Yeah, anything you do, if you mess with the slider on Bybit, it's going to carry over to Bybit Pro. So whatever you set it on Bybit, it's going to be respected on Bybit Pro. It uses API to talk to their exchange, and how your Bybit is set up. Bybit Pro is going to reflect that, so no worries. Shouldn't be a big issue. Now I still don't know. I mean, I do know, but at the same time, you know what I mean when I say I don't know. I don't understand it. Why people are trading on isolated margin. It's 100% for those who want to be and will be liquidated on isolated margin. If you guys don't understand leverage here and how the number of contracts affects it, and why you should always be on cross, contrary to every article that is spreading the fear around and telling you that you should never use cross unless you're professional, you better start trading professionally on day one. Because why wait? There's no magic in it. There's just a simple disciplinary behavior that you need to follow, and cross leverage is what makes sense, or floating leverage as it's known elsewhere. And you should not be fiddling with the slider to give you an advantage or some sort of. It doesn't do anything. It doesn't do anything at all. So cure it, Bagaret, don't mess with it. But if you do, and whatever you set it on Bybit is going to carry over to Bybit Pro. Yeah, I think we head up first, and there's like a little bit of momentum. You see how slow it is right now? It's telling me that it wants to go up, but it'll probably fizzle at the top there. So 43 is the range. Remember, guys, from last night, up to 43 is where you want to keep your eyes peeled around that level. And then I think there's also don't forget we have this thing, right? So I think we're gonna tap it one more time, overperform. and then come back down towards this level. It's time now. We also have this is a monthly developing holy, hold on a second. Is it? Developing CPR is monthly, yeah. We're above it right here. So we never run a monthly developing CPR over and above. Like we usually come back to retest it. This level 100% we're coming back. But 2 days to go. 2 days to go for a new monthly candle. Pull back and then continuation is my belief. Pull back and then continuation, or Darth Maul opening monthly candle for sure. But we're going to most likely come back to, I don't know if this was it, but we came back and we retested the monthly open. That's bullish. All right, that is extremely bullish, and we're now floating above it. But I don't think this was the real retest, because we didn't really hit anything to be rejected here. It was more of a just traders' reaction here, thinking that, oh, there could be support. Let's see. But I think it goes a little higher. I think it goes a little higher. Are we gonna make it to R2? It's going to get pretty violent here. This green, look, it's edge to edge from here to here. We made the whole distance. This is going to get run, and it's going to chop through it because it's so thin. We're gonna see a lot of volatility up there. So just be careful, whatever you're doing right now. Trust me, you're gonna see some crazy shit that's gonna happen once we run the 42-41 level. It actually, it may go up to R2, but then it's gonna slam back down like there's no tomorrow. Trust me. The indicator here tells us that volatility expansion is possible if narrow. This is the narrowest, and it's a monthly. Look, we came here, we touched it, and we rocketed off from there, as expected. We expected a lot of violence here in the platoon at the 28-27 level. I wasn't sure if we're gonna run it, but it was just around here. Now we were very close to the area again, so please take care. It's going to be interesting. But yeah, the next dip down to that 34-33 level, whatever, if it happens pretty aggressively, I'm 100% buyer. I'm 100% buyer. This divergence, though, few more candles. You're gonna see 43 green, and then silence for like a day or two, and then we go down. That cross is on the horizon too. The wrecking ball here, the orb, is floating freely. There's no. It cannot break through here. It can't. There's no reason to, and it won't. It's way too powerful. That reaction here. That cross is gonna happen, and probably at that time will be somewhere around like 50s level. And then when that cross happens, we'll break down towards it, and yeah. We have bullish momentum so far, and there's lots of arguments here to support that. I think we'll get one quick significant dip that we should be looking to buy into. But it'll be a while before we come back down to these levels here, in my opinion. Unfortunately for people, including myself, who want to buy Bitcoin lower and cheaper, obviously 40K now, Forget it. These guys, they didn't want to buy 40K before. Why are they buying it now? I'm not. I'm still gonna wait. It's a cycle. It's a cycle. It has to pass. But yeah, this thing is going higher. And I'm just accumulating it in the range over here. Unbelievable. This high over here is so compressed. I don't see it. Yeah, we're getting that squeeze. That squeeze is gonna chill here for a little bit, and then we're gonna have that impulse, and I think it'll fade. It'll fade, and then look at this CPR staircase. 1, 2, 3, 4, 5, 6, 6 days, 7 days in a row uptrend. See that? Started from here. Started from the bottom, now we're here. Look at that. What happens to Drake? Is he still out there performing? Bounced on the median, on the Bollinger, which is the 20 simple moving average, 20 period simple moving average right here. So that bounce is likely going to give us one more push. Yeah, I wouldn't chase it at this level. I wouldn't chase it. The clamp here is going to pinch. You see the pinch is coming. That's in 1 hour. 4 hours, I think we're gonna walk the Bollinger Band still. Yeah, we're gonna walk it. And by the way, when it goes flat like this, you can expect it to come back down to the flat area, basically. Unless it starts moving like this, then it's not good. So far, this is showing us that any impulse up will probably fade and come back to about here. So let's see what happens. We had one crossover here, which is telling us like all of this is going to get faded, and we'll probably have a candle that takes it all away, all the gains here, most likely. But we're seeing overall healthy equilibrium 1 alignment. We're having a cross that's happening here. This is also a little it's bullish, but it's bearish. It's gonna pull the price back down towards it first. But yeah, we have equilibriums that are panning out. It's a good sign. I think any pullback, I want to be a buyer. It gets closer to the monthly over here at 34. Quite a distance. I wonder if we get there on monthly open. I don't think so, but would be nice. Would be really nice. Yeah, but we're still walking the Bollinger Band over here. And most importantly, this line here will be extremely difficult to overcome. It'll be the first time. That's why I think we'll have an impulse, and it's a pretty powerful value line. Anything over that is overvalued. Combined with a bearish divergence here, that's telling us that in the future the next spike will get faded. CPR levels telling us that we may get a retest. This thing, volatility is going flat over here. So overall, I think we're doing the right thing here by accumulating into a short. But like I said, it may get extremely volatile up there. I don't really care. We're sized up accordingly, appropriately. Everything's good. Yeah, so with the signals, any signals in the market, always assume that the opposite is going to happen first. MarketSpy tells you bearish divergence. Okay. Consider this one, the small bearish divergence, right? It tells you price is creeping up, no sellers inbound. This is a small bearish divergence, right? And it shows up here on the flags, and you're thinking, it's a short signal. Everything else looks healthy here, momentum, everything, right? But this is telling you that in the future is going to happen. This divergence actually then materialized on, if you look on lower time frames, like 1 hour and 15, this printed, but it was actually this divergence that told you that we're going to have a little pullback. So this candle represented that bearish divergence. I can't explain why or how this happens, but to the power of observation, you can put one and one together and see why we use these checkpoints as places to go long. Okay, and that's because so we have this divergence. Indicator is lagging. It is telling you that it's diverging right now, but we have 2.5 hours to close. So this thing can and may disappear, but it's going to go up first over here, and then it's going to come crashing down based on this. And again, this is a regular bear divergence, which is not hidden, which should tell us that this is the end of the trend, but we don't know that, and so we cannot really assume it's the end of the trend, because if it doesn't play out, that means it's not the end of the trend, and it's going to continue. I don't look at divergences anyways. I rarely do I use them as a signal, because they're extremely lagging. They need at least 2 to 3 candles to confirm. It has nothing to do with programming indicators or anything like that. Even visually, without anything on the chart, just by using lines and an RSI. To confirm a divergence, the candle has to close, has to go and retest the support wherever the divergence occurred, has to get rejected, go down, and then you're like, oh yeah, that's a divergence there. And now you have to make a decision to short, but your entry becomes somewhere around here on a confirmed divergence of a trend reversal. But if it doesn't, then you can't really call it a divergence. But in terms of indicators and how they show you things technically, we generally get one more spike, and then in most cases, right? If we do get it now, then that's telling you there's a shift in the trend, and the market is now second guessing itself, and you may not get it. Hence why I'm not long here anyways, just because the pivot was way down there, and now we're here, and I'm thinking about longing. No way. I don't care. I don't care if this goes to the moon. I'm strategizing. Strategize with me, people. Strategize. Our pattern. We need this last. If the market says no, I know what you're up to, and if it doesn't happen, hey, so be it. How's that coffee looking over there? It's funny how that initial drop, that first rejection from the resistance, or the perceived resistance, was accompanied by news about Amazon dismisses all the rumors, and the rumors were fake, and Bitcoin sheds 2K, and traders are now not so sure that the trend will continue. And then we have another rise, like, buy the bearish news and sell the bullish news. Right now, all the news are bullish. Think about that for a second. Everything is literally just peppered with institutions getting in all of a sudden. Give me a break.
It's a corrective rally. So I'm going to do one experiment live on this stream. We're going to run like these new setups where I'm literally going to scan right before your eyes. I'm going to risk my own capital for this. And well, obviously I'm not, so I have my own capital. What I'm saying is I'm going to run through the fundamental analysis using no indicators, nothing on the chart. I'm going to show you what the results are. We're going to run this experiment for about a week, and we're going to buy every time A and B crypto or CoinDesk or anyone, like, you know, Being Crypto, all these websites, every time they say something, every time something comes out of these editors' mouths, like Bitcoin gets rejected as traders or buy. Every time they go bullish, sell. And we're gonna do this for a week, and I'll show you what the results are. I've done this before on my own as part of a little fun that I have every once in the markets, but I'll show you the results, and let's see what that does. The reverse psychology of everything that you see. That's why they call it noise. There is no FUD. There is no FOMO. There's nothing but noise out there. Fundamental analysis is literally trash. You need price action. It's the only thing that matters. So yeah, let me know if you want to see that. We're gonna run it from starting from next. Let this new candle open. Let the FUD come in and regulations and whatnot, and then see what we can do about that. Every article, I'm gonna do exactly. I'm gonna act on those articles and open a position. 1x, not just small 1,000 contracts. One full 1x, risky, sizable position, and see how it does. I think it'll be a lot of fun to just watch how things are not what they seem most of the time, and that we should take advantage of understanding what is fundamentals and what is price action and actual signals that are tradable, that are technical. Yeah, I'm looking forward to that.
ATR values. Right now, the ATR value for 4-hour time frame where this divergence is playing out is 1,353. That's the distance. Now, since we're trading the 4-hour chart, I think this is where 90% of these contracts have to be removed. And technically the entry is where's your entry? Like we keep talking about ATR, but some people may not know that our magical baseline 1 is how we know where that ATR value should be. So for example, when these diamonds, yellow diamonds, disappear, that is an entry point. We don't know if this is going to go up from here or down. It may bounce, or it actually may go lower. Now, as a daily CPR here, there's also a dragon skin bounce, and we know that because of this flat, there's a chance for this to go down here. So let's measure this. Seeing how we have a potential baseline reclaim if we close above it. It's not confirmed yet. I don't know if it will. Most likely not. I don't know. But let's say our entry is around here, and 1,353 would be somewhere around here, and that sits at BC. So that's the bottom center pivot line. We can mark it somewhere around here. And I would say these two candles right here, just before that, is kind of like a flip to support. I don't know, there was a little bit of support here. We broke through it, then resisted against, and maybe we'll come back down here again. So this is the profit taking area right here. Now the dragon skin also tells us that we may have a substantial bounce if it goes all the way down there. But the ATR value on 4 hours, it's not a straight line. This thing can go back up, do this, and it could be many candles before we see that level. But the entry point is always calculated away from the baseline. No exceptions. Away from the baseline is how you calculate. Not from here, not from any particular level, but at the baseline. At the baseline, you have to make a decision whether to go short or long. Now, money flow here is kind of dying off, but at the same time, we're in a thick green cloud, and it's still a buy signal if we dip. So because we have been accumulating short, and our distance is already 771, let's just auto track price, and to get to this level we need another, what, like 600 points, about there. So 1 hour ATR, one more ATR, and this is where we'll take profit. We'll put entry as the stop loss for the 10% that will remain running down, because ATR may double in value and go all the way down here. So 90% needs to be closed at 1 hour ATR, because we already made half of it. 4 hours is 1,400, 300, somewhere around there, and we go long. So now the price is at 38,422, 38,420, just about somewhere around here. Okay, now we don't do anything, and we're gonna have to wait for this to occur. The measurement starts from the baseline, and this thing may, on the next candle open, go up, then it may go down. Who knows, right? But we don't touch it, we don't fiddle with it. When there are no diamonds, there's an entry opportunity. For example, no diamond here, close to the baseline, a long opportunity here to capture this candle, and the ATR at this point was about 800 points. So if your entry was anywhere on this candle, let's assume that you went at the top, 800 points is right here. So your exit, pretty much, if you don't have a chance to exit there, then you have to put a stop loss at entry, and you have to take profit because this can happen. All right, and now we may be looking at a two towers double top over here, 1 2 fingers right here, and maybe this will push the price a little lower, and we should be planning our exit there. Now we should also calculate the HC from here to here, and it coincides with that 4-hour ATR level to take 90% profit on whatever the number of contracts we're able to accumulate. This can retrace all the way back up and bounce away from here, and as a matter of fact, I'm counting on it. So, but in preparation of things to come, we have to get it moving, and these red dots over here represent the 20 moving average, and we may tap it, and there's a lot of confluence here, so we may actually get to go there pretty soon. So that looks pretty good to me. What's the R? You said that we were going to go up first. What gives, man?
Yeah, I went long like an idiot at the top, thinking that we were going to go up first before we're going down.
Tonto, tell them.
Price action is king. Follow it like you follow your heart, and everything will be okay.
Understand this. Pretty simple. Pretty simple. We do what the chart is telling us and nothing else. So let's see what happens. Hopefully that makes sense. And this, my dear traders, is what our work looks like. This momentum is kind of fading, not really, but it's getting there. It's getting there. But yeah, this could take a while. It looks like almost there, almost there. Next predicted price point to close is at the plus sign over here, based on volatility on the 4-hour time frame. And if on close this, so the candle will close and this plus sign will stick here, then you better believe we're coming for that level, and we're gonna tap it within the next few candles. 4-hour time frame, give yourself some space. You're looking anywhere between 12 to 24 hours to complete the trade, and this is what I keep talking about, that you're basing your trades on ATR values, and you have to take profit when you're in profit. Am I holding this all the way down here based on hope? No, this is a purely technical proven way of taking profits. And I'm not following the advice of let it ride. You're getting out too early. You could have made more money. They want to trap you. Another way you can do this. What if it actually doesn't go and hit that level? Well, right now you can cast a ladder using 1-hour ATR and close as many contracts as possible, with your average being, let's give it a try, shall we? So 1 hour, 700 points to go. Buy from this level. We want 90% preview buy. Your average is 38.8. So you're losing about 400 points that you can profit. And for this position, that's kind of a big deal. That's $64. So is it worth it averaging out? Unless you think that this is extremely bullish and there's no way in hell we're going to go to this green line, then yeah, you shouldn't mess with it. But no, I mean, if that's what you think, then yeah, you should start taking profit as soon as. But in this case, if you're not even obeying the ATR value, yeah, you are kind of exiting your trade a little too early. You should allow a minimum of 1 ATR, otherwise it's, you know. But other than that, the accumulation phase continues, and you're averaging as necessary according to the plan. So we create a plan, we stick to it, and then see what happens. We do our little markings, calculations, and that's about all we can do. The rest is up to the market. But admittedly, these charts, I don't know about other traders. I have not seen other online communities and how they do their things, but I have seen entry, invalidation, take profit, and it's based on just arbitrary, God knows what, just some lines thrown in here and there, opinions, biases, and I don't know. It's just, I don't recommend it, but to each their own. There are some people who are really good at it intuitionally. They just know that exact precise location, that point, and you see a lot of that online maybe. So yeah, if it works, especially if it works for you, is what's important. It doesn't really matter what I think or what they do. What works for you, right? But I can tell you that professional traders, this is what they do. Everything else is a myth. They don't really hold it. They don't have these levels. Oh, I think it's going there because it just looks like a good level. No, the algorithms work on these pre-programmed sort of ATR values, and it's volatility is basically what it is. It measures volatility, and you have to understand where a price could potentially move before it gets a reaction. But like I said, every once in a while you get lucky and you have your ATR, but then that 10% runner, this thing can drop by 5k all of a sudden. Who knows what? Elon Musk could be talking shit right now, and you're riding it, but you're riding it with only 10% of your allowable contract size. The 90% you're taking on that ATR value. So Simon noted the divergence on 4 hours. It's near the baseline, could be a reclaim. So yeah, we're working with a 4-hour time frame. Now on other 15-minute time frames, you don't even have to go and look at it. You already know that it's made the distance, and if you were scalping or trading this on a 15-minute time frame, you should be taking profit right now. 500-point distance. Let's check out the 15-minute ATR. Boom, almost double that. You should be taking profit and running with it right now, and leaving the 10% to run. That's it. Oh, almost 900. But look, ATR is an ATR, and we shouldn't fiddle with that. Let it do its thing, okay? Chad, where are you? Are you all in the trade? Busy? Fingers crossed? What's going on? It's too quiet. Oh, the Fed FUD chair speaks today. Any concerns? Not really. We're short the Fed. And it's business as usual. Hold on a second. This is top chat. Why does it revert? I need live chat, not top chat. So CME has volume. I think the clients that they have, you know, it's a priority chart. So I think it's a good chart to read. But when it comes to trading, if you're trading Bybit, your data here, numbers, everything has to align with Bybit. So CME doesn't really help in that regard for live scalpers, traders, because you have to work with what's right in front of you. So this is a derivative on Bitcoin, and it has its own the price is derived from two parties agreeing of what the outcome should be, and it draws its market value from an aggregate of like 5 or 6 liquid exchanges as the reference point. So I think it's pretty reliable and in sync with the rest of the world. But yeah, CME excludes weekend data, so that's another thing. You get less noise with it, but you have to understand what's happening there. So you can't really trade it unless you use their platform and you're one of their clients. And the majority of altcoins and Ethereum, I don't even need to look at those charts. It's basically what I'm looking at right now. Basically, all of them. A few exceptions here and there, right? But in terms of patterns and potential setups, pretty close. Bitcoin is still king and dictates their future. When you analyze naked chart, do you use any additional theories like Wyckoff patterns? No, not the widely available public studies like the Wyckoff patterns. You know, I think in today's world, the state that the markets are in right now, a lot of these legacy, I mean, respect where it's due, and incredible work. But if you guys want to learn about algos and get a little deep, go to ResearchGate and read some papers on RSI, read some papers on moving averages, and see what people have published. Some of it is protected, so you have to pay for it or request. But there are teams of researchers that have put incredible papers together that talk about technical indicators, how they react to price, and then why. There's a whole world out there. ResearchGate is the website, and then you can dig up some valuable information from there if you're really interested in. But theoretical stuff, I don't know, Wyckoff patterns and all that stuff. It's price behavior, human behavior. It's humans are unpredictable, just like Bitcoin's price. So yeah, they have those gaps because of the weekend data is absent, so they just gap through weekends or holidays and stuff like that. Yeah, media view, that's for the 10% to run to that level potentially, so we'll see. Yeah, nothing is confirmed here. Nothing yet. So our flag pattern, so look, if it is, I'm not a magician, you know, we will be wrong. Many times we have been, actually I lie, we haven't been wrong many times. There's like 2-3 hiccups overall. But these are projections so that we understand where, how can we maximize the potential here on the chart. And this would have been nice, and over an impulse before a correction would have been nice, but if it doesn't happen, it doesn't happen, so it's not like it has to be precisely that way or the other. If it doesn't happen, fine. So it started falling now, and it's like I said, no diamond, and for people that's already 500 points on the baseline cross here. When it closes and impulses back up on the next candle open in 2 hours, it's gonna go back towards it. And obviously, it's a short at that point, because a baseline reclaim and the retest is your short point again. So it may go lower from there if this closes. If it goes back up here now and closes over here, then the party is cancelled. And you look back and you're like, why did I not take profit? It was so close. Why did I have to wait for that precise ATR value? But hey, rules are rules, and if that's what you position yourself to do, then you have to kind of follow it. Then you may be having some other thoughts, such as, why don't I take profit now, let it bounce up, and then get in again, and then close it on the ATR value? Or what if it doesn't bounce up? What if as soon as you close it, it actually completes that ATR value and then bounces? So you skipped on the ATR, and it's bouncing on the TC level right now. The 500 points just now. The volatility is crazy, so I don't really care about it, to be honest. Stick to the technicals, and eventually it'll hit. 2 hours to go. I don't know where it will close, but we'll see. Clifton Lewis, 100%. As a matter of fact, this is not a value price chart. This is a human emotion chart. Excitement, depression. Excitement, depression. Fear, greed. Fear, greed. Fear, greed. And it's a constant battle. And the market is just a reflection of human emotion, 100%. It's when you go hunting, for example, right? If you guys hunted, you know that if you step on a little branch and the deer is over here, for example, right? And you step on a branch and it goes broke support, and the deer kind of like alert, right? The Metal Gear sound. Huh? What was that noise? And you know it's going to start running, so momentum will accelerate, and it's like, oh man, you spooked it. So once we breach these levels, once we have signals that algorithms go, huh, wait a second, humans are starting to, the price is reacting at this level because everyone collectively is thinking, like, oh shit, I better take profit here, because and then if everyone else joins it and then the market comes to an agreement, yeah, this takes place, right? And then you see what you see on charts, and I don't think it's, but it can, when they say they manipulate the markets, you can spook people, weak hands, and those who are less aware of what's going on. They can be easily driven to make certain decisions because there are stakes, money is at stake, right? and you stand to lose or gain something from this. So yeah, it's an emotional wave. The market moves in waves because that's what that's what people are going through. So 100%. Stop! Where did this come from? Oh my god. Too random. That music just... Never again. I think someone hacked my stereo system here. Was it you, Tonto? No, CR. You added this song to your playlist after you played Cyberpunk 2047. You mean 2077? I don't play games. Perhaps. Oh, okay. Whatever you say. Sorry, I thought it was you. No worries, CR. Go rest. You need it. You're right. This is getting tiresome. So... yeah, I don't know. I don't know. Many altcoins have similar price action as BTC. Okay. However, can be noticed that their volatility happens big in terms of percent, so using USDT may be more beneficial sometimes to trade them instead. Sure. If you know which altcoin is going to the moon next. Two things. If it's liquid, if it's listed on enough exchanges, why not? Just make sure you get to know it really well and its fundamentals also, because altcoins, unlike BTC, are really affected by fundamentals because they have these promises and white papers and they have to deliver on them. Bitcoin, everyone knows why it's precious. Everything else has to prove itself. So fundamentals play a role in altcoins, I believe. Okay, let's see. Okay. Yeah, I don't know about that dip. Bitcoin indicators point to a possible inevitable break above 40K. Oh, really? I didn't know. Bitcoin hanging around 40 ahead of Fed meeting. Thanks for letting me know. And here's altcoins. HBAR, Anchor, and Tilly's pursue breakout from descending channels. Now this hash graph thing is really interesting, actually. It's really interesting. You guys think it poses a threat to other cryptographic algorithms? This particular blockchain here. This thing's weird. It creeps me out a little bit. I don't know. The top echelons of the U.S. government held a closed-door meeting attended by Jeremy Powell and Janet Yellen to discuss stablecoins publicly. Almost nothing was said about this meeting. Long Shopify? Always. Hey, this thing right here, the Ethereum trading volume increased more than Bitcoin's in first half of 2021. It is true, not only on Coinbase, but I do believe something interesting is going on with ETH. I am trying to find some sort of derivative product that leverages Ethereum so I can put a little bit of money in it. I heard there are certain tokens like on FTX exchange that are bull and bear tokens, so I was thinking maybe exploring those a little bit. But I think, yeah, if you guys have any ideas about any interesting Ethereum derivatives offered by any of the exchanges that are decent and liquid, let me know, because I think Ethereum's I don't want to outright buy it, but I want to speculate on it by maybe putting a little bit of money into some sort of derivative that plays on Ethereum's long-term prospects. And I think it would be a great idea to just kind of be a part of this whole. I think there's something that's going on in the background with ETH. I'm not sure what it is, but yeah, I'm looking for a way to own it without actually owning it. So I don't know. Any ideas? Anything that's out there that's tied to Ethereum? Could be a worthy play for like a 3 to 5 year hodl. Maybe futures. I don't know. I'll look into it. Options. Throw in $1,000 and just let it brew. You know, see what happens. This thing takes off and it becomes like a 10k coin or something. Then we stand to gain something from that as well. But not buying it at like market prices, the coin itself. Some other instrument that's tied to it. Oh wow, Coca-Cola officially gets into NFTs for charity. You know we have a Bybit Pro NFT. If you guys want to support the development, you can buy it. It's pretty cheap. A couple of dollars, I think. I don't know. I'm not sure, but I think Transgenic made an actual NFT with it's a Bybit Pro PNL card where Ethereum was bought at like $36 or something. It's got like 30,000% gain on the PNL card. Pretty cool. 50,000 by 50,000 resolution. In case you wanted to print that, put it on your wall in your office. Highly recommend it. Not sure how to get it, how it works, but ask Transgenic if you're interested. But there is an NFT for Bybit Pro. And I think it's only one. It's still available. Wink wink. Hey, MediaView says I have bought bull and bear tokens. Just waiting for a bull run for them to explode. Okay. I need to look at those products. They seem interesting. I just don't know what the risk is like there. What's the mechanism there? Is there funding? Is there? Are they liquid enough to be able to, like, how do you don't really sell it to other participants or buy it from them, right? It's just, how does it work? I'm not sure. I need to look into it. It's not gonna make any sense asking questions right now. I need to know what it is first before I start asking questions, but I'll keep that in mind. MediaView. At least I know we have some people that have played with those in the past. Yeah, I think Ethereum could take charge. There's so much that's happening in the Ethereum development world right now. It's kind of it's too quiet. It's too quiet. Everyone's talking about Ethereum, but not really. It's the spotlight is not really there, and I feel like there's buying power at play that's accumulating right now for whatever reason. I feel like there's something out there, just based on a hunch, intuition, that there's something about Ethereum that's going to make it that much better somehow, like an evolutionary. I don't know. There's staking. They're talking about ETH 2.0, and I think that would trigger a rally, and it would be too late to buy in. And I think I have a couple of Ethereum. Like when I mean like I say a couple, I mean a couple, like 3 of them to be precise. Less, to 2 and some change, almost 3. But yeah, I don't, I'm not here for the tech. I don't really care about its use case and utility. But I do think that it may go up in value. I just don't know. I heard there's unlimited coins. I don't know the distribution, mining, how it's all connected. Bitcoin's a bit more clear, easy to understand, but Ethereum is, they're upgrading it. Now it's not proof of work. It's a different algorithm. Now staking, different payouts now. I don't know what the miners are going to do about all the hardware that they have. I don't know. There's so many questions with Ethereum, but I feel like there are people out there who know better, and they're buying it slowly, quietly. And it's really hard to suppress its prices. It's back above 2K again. Just a hunch. It's like the spotlight is they do it on purpose. They're not talking about it. I feel like everything about Ethereum it's floating around, but it's being suppressed. Like no one's really reporting on it. You come across a few articles here and there, nothing too significant, but I think there's something that's brewing there. So that's why I want to look into some derivatives that bull, token, bear. For some of the alts, you have to look at the daily chart, as they seem to just decrease in price as time goes on, even if the price of the underlying asset goes up. Okay, that's interesting. Hey, and just like that little divergence drop did nothing. Closing above that baseline soon in 1 hour. Nothing. See, I told you it is likely still going to go up and give us that impulse. Run the freaking stops, resistance, and then come back down. It's never easy as that. And we're going to be in the minus soon. We are at, just to give you an example of what kind of bullshit you're dealing with in crypto, and why you have to take profit when you can. But of course, in this case, we have decided to stick with it. But it dropped by 1,000 points. Now it's back up by 1,000 points. Like, what? Oh man. Look. See what I tell you, if it's gonna close, there is no baseline reclaim. There is no reclaim. It's gonna close above it. Then it's gonna keep rising up, and then sometime later it'll break. Not now. Shorting, you don't have time to take profit. There is simply more buyers at any given time. Even when this thing is dropping by like 20,000, 30,000 points, there is still buyers at any given point. And go to a 5-minute chart and then look at the dump that we had from 60K. There's still like, there were crazy huge spikes every few candles. There was a buying opportunity basically, and all you had to do was take profit. So holding this is a whole bunch of nonsense, and as you can see, this thing runs by 2,000, 1,000 points up and down within a 5-minute frame. It's ridiculous. I knew it. I knew this was like, it's dropping, but it's not going to even come to that level. It's going to bounce away from that CPR top and close above the baseline, not getting reclaimed. Another reason why you need to confirm, as you see these things need to close. When you see the little yellow flag, you need to wait for it to close and confirm what's happening. You see it's creeping up towards the baseline. Never front run it. Let it close above or below it to give you a solid answer. And yeah, it's just it's not happening. Or maybe it's triggering stop losses right now. I don't know. And this is why I set up a plan and I walk away from it or do something else, because yeah, talked about a Darth Maul. There's your Darth Maul, and now it's a spinning doji that's kind of like post double top flag. So the next candle that opens could make price go up again, and we're back to accumulating and waiting for that original setup. I don't know. Volatility is insane right now, and that's why we don't sit. I don't recommend you sit in front of the charts and watch what's going to happen. Set it up. Whatever happens, happens. You have your accumulation range, you have your plan, you have your values, and let this thing dance up and down, killing all the small guys on a 5-minute, 1 hour, 1 minute time frame that are trading, trying to scalp it with leverage, and it's that's how you get murdered. Look at it. And that's nothing. That's not even the whole spring action. Wait till it goes over here. Wait till it drops like here and then instantly get absorbed. Yeah. 2,000 points easy. Back up like nothing happened. Who would have thunk? This is a long signal. We don't know. But since we're short, I'm short. My ATR is here. Entry is here. For others, if they're long, ATR take profit is here. So, but yeah, this thing, the next candle is going to open. So far, the platoon chart is playing out. That's what I think is going to happen, and it's just like clockwork, and it's going to continue to do its thing into tomorrow, I think. There's greed in the markets, you know, people who missed their chance, who did not see this coming, who got completely wrecked, and they couldn't believe this, right? And then now, a little dip, everyone wants to buy it, and they are buying the top most likely, and they don't even know it yet. It's the same thing every day in the markets. You know, this kind of price action, you know, price goes up, no sellers. And then sellers out of nowhere, you know, they come in and buyers are like, ooh, right? And then it crashes and everyone is wrecked. And that's exactly what is going to happen here. 100%. Because people never change, and the market reflects that stupidity, that anger, that excitement, that casino shit mentality, right? So that's why you have these rapid. But remember, most people are investor minded, and the only thing that they know is up. Buy. The whole market is based on the premise of buying. It's not to really sell anything. The majority of people are buying because they're like, oh, I think that's a good level, that's a good dip, I'm gonna buy it. And hate it or love it, they're right. Buying is more profitable. Not at the top like this, man. So the market will punish those that are refusing to allow it to correct, to go down. So that's why traders, professional traders, say if it doesn't have a healthy correction, we're in trouble. We're not really excited about a trend change because that will end up badly. Now, the bull run that we've just had, we kept going up and up and up and up and up, and there were no corrections. We had a few of them, a few tiny little dips that lasted a day or two. And then, from 65 down to 28 in 2 candles. Well deserved. Because people's greed won't let the thing die and refresh, you know. Find some actual smart money that wants to buy it at a healthy prices. So, but they will get punished. They will get punished. The top longers, they always get punished. The bottom shorters, they always get punished because, you know, they're angry at a price going up, and they're like, God damn you, I'm gonna short you right now. It's over. I hate you. Shorting is a personal thing. It's like, it's almost it's almost like I don't believe in you, I don't need you anymore, and I hate you so much. You wrecked me so many times that I'm gonna keep shorting you because I've got nothing to lose anymore. I just don't give a shit. You're the shittiest asset in the world, and I want to see you die, and I want to be on the side of people that are shorting you all the time. And bears get wrecked no matter what. Sooner they have their party, you know. They have their little bachelor party, and they go crazy for a day or two, get drunk, and then they're vicious though. They're like bears, alpha predators. They don't play around with those guys. But they're seasonal, you know. They come out, wreak havoc, and then they go back to sleep. So Darth Maul, 4-hour candle. Here it is, most likely. Now again, it's a pin bar doji. It is at the top, but this flag is a checkpoint, and I thought that it's not really done. And then divergence. I know people, you know. People are shorting the divergence. It has to go up. It has to go up. It always does this, and then the next few days it'll exhaust and just simply crash. It'll simply crash where people will be like, you know what? I can't do this anymore. I don't want to buy it. So yeah, most likely. So these are the kind of things that sometimes you just have to wait. You have no choice. Takes forever to perform one simple trade. To capture one candle is not so simple, but we'll see. Time is of an essence for Bitcoin right now. But yeah, if this thing overall does not correct down to 20k this year, then we're gonna have a much deeper, more prolonged multi-year bear market later. Simply, when the rotation comes around and then it's time for money to change hands, everyone will be left naked. We haven't seen anything yet in terms of Bitcoin correcting its bull run. That drop 50% was just a scratch on the surface. It's not even the cherry on top. So greed will be punished if they keep pushing it right now. If they keep pushing it, when the big boys take profit, everyone will need to change their diapers. Trust me, it's gonna happen, but it's gonna be worse than the 65 to 30k drop. Guys, we dropped 1,000 points. We're back 1,000 points right now. All within, what, 15 minutes? Yeah. Boom. Boom, 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 right there. Hey, when is the Fed going on stage to talk about things? Are they talking about things right now? Why do I have a feeling they're opening their mouth right now? And the market is interpreting it as bullish. Are we about to see like a Jesus candle? No, you can't have a baseline reclaim like that. Come on, drop it. 2 consecutive bullish divergences in a row against the bearish divergence on 4 hours. Don't play divergences, you know. Don't play it. I'm not done accumulating, so I'm not relating to what's going on here. No, you know what? Cancel all this nonsense. Take profit. And then resume the accumulation stage. Look, 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 look. We had a squeeze, the pinch right here, right? Below all baselines into EQ3. We go back down with 1, 2, 3 consecutive bearish signals and dying momentum. And then we suddenly reverse back into EQ1 right now. And it looks like it wants to go higher. Meanwhile, we had that squeeze over here. And it's actually not... It's squeezed in the wrong direction, and now it wants to go up and create a bubble here, and it's probably going to walk into this blue territory. Like I said, on the 4 hour, it's closing above the baseline. No bueno. Wants to go up to 43 or so. Let's see what happens. And obviously I'm not going to be sitting here for the next 4 hours to see what happens, but I'll come back to it tomorrow and report how things are going. I'm going to leave this 1x running on the daily ATR up to here, and then I have a different plan altogether, but this is the original, and we're seeing the flag paint our pattern. I expect an impulse, and then I want a correction, and that's what I'm trading. There we go. If you guys are yeah, I'll reject back downwards, but $1,000 distance from entry to take profit, and then it doesn't really make that distance, and then it's making its way back. You know, like so when people say, you know, oh, trading, consider your entry point anywhere here. To be able to take profit on a simple ATR value, it's not allowing you to, like in one candle. So it is very difficult to capture one of these candles. You have to do a lot of calculations to be able to maintain your sanity, because like look at this, look at these reversal candles over here, and then that impulse. I think and I hope it actually goes back down here and erases all these gains. I think it will. I think it will. It may take some time, but it will. All right, folks, good luck. We have been churning out these setups that are picture perfect price action setups, triple P, since the beginning of time, and we will continue to do so as we trickle our way into the future, where Bitcoin is part of us and we're part of it. I've shared my opinion about how you should be trading directional patterns, and that you have options that can help you better spend your time trading and analyzing and executing trades directionally, you know, up and down, and be okay in both scenarios. And so this is no different. Let's see what tomorrow brings. But I'm expecting the 40k level to get run at least once before we correct, and I'll go sleep on that and have my position be ready to take advantage of that run. And then we'll see what happens tomorrow, and I'll see you back tomorrow. We're still looking at the same setup from last night's video. If you wanted to know what the platoon is up to, there's a detailed analysis and breakdown of the chart. I don't have it painted here, but there are multiple takes, multiple angles on how to stay better prepared for whatever may come our way, and we're ready for war. Mag 7 on 15. Yeah, of course. Like, yeah, it is. It is. Head and shoulder my ass. They really hate it when people make money, huh? Nope, changed my mind. Now people are going along and it'll dump, and it'll like, nope, not you two. You guys are not having it either. But anyways, this is the end, my friends. So far so good. So far so good. Look, we had 1, 2, 3, 4. We're squeezing, and as we come to an end here, breakout, retest, except it's a failed retest, and we go flying right through this flag. Call me on this tomorrow. I'm taking full responsibility for this trade, for myself, and I advise you do the same too. Have a good night. It is 4 a.m. in the morning. I'm setting records here with you guys every day. Time I got some sleep, and we'll come back to this tomorrow, 12 hours from now. Thank you for watching, subscribing, and tuning in every day. I appreciate you all, and let's go get it. What if the retest will not fail? Well, we already talked about that. I have a plan for the retest not failing. We'll manage, is all I can say. We'll manage. We'll report back on this trade tomorrow and turn it into another educational video that we'll discuss about. Well, you will see. You'll see. I'll keep it running. It's not like I'm not going to close it and then come back clean. I'll keep it running and show you what happened, what transpired, and then what to do if the retest does not fail. All right. And that's all. Ranger out. Have a great day. Have a good night. And wishing you much profits, much wow, much Bitcoin, and less Doge. See you guys later. 1, 2,